So which side should you, the investor, be on, with those unwinding bearish positions or the clan of the cautious? Let's get right to the floor show and two of our most successful traders on Wall Street. We have John Corpina live at the New York Stock Exchange and Scott Bauer live from the CBOE. You guys, finally, it's the actual floor show, right? Not in name only. Welcome to you both. John, I'm going to start with you. Market bottoms are sneaky, right? It's really hard to see them until they're in the rearview mirror. Where do you think we are right now in this investing cycle?
Hey, Liz, good to speak to you again. Absolutely. You're never going to pick the bottom. You're never going to pick the top, and you're always looking in the rearview mirror. But the opportunities are still there in front of us. The headlines that we've seen over the last few months and quarters are still headlines that are near the surface, right? We're still talking about interest rates, supply chain. The COVID headline has quieted down for a little bit now, but those things are certainly still there that's going to rattle our markets. But our markets have shown that our economy is strong, able to shrug off bad news, and we've been able to rebound off the lows. So where are we now in this spectrum of things, right? So S&P is up 10, 15% off the lows that we've seen, but still down 10% on the year. Things that I'm actually looking for that's going to help me decide which way the market is going to move is keep an eye on a few things. One is the VIX. The VIX is trading below 20. I use that as a psychological level. It's trying to stay down here. If it can stay down here for a little bit of time here in a pattern, I think that will be helpful. And look at some other levels in like the S&P and the Russell. The Russell's close to that 2,000 number. I know it's psychological, but if it can build some stability there, it should be good. The market has, the dust has settled a lot in all this headline news that we've seen. We talk about interest rates, what's the Fed going to do moving forward. I think the market has absorbed a lot of this bad news, and when the market does absorb it and can be somewhat transparent about it, that actually turns into good news. We've gotten through earnings season. Outlook is not as bad as we think it's going to be. We need to get through the next few months, and I think the end of the year, end of the third quarter, beginning of fourth quarter, we'll see this market continue to stabilize higher.
I mean, look right now, folks, look at the bottom right-hand side of your screen. The Dow looks like it's about to turn positive. So, Scott, John just said that these markets are able to absorb frightening news, bad news. Look at today alone. You had 3 Fed heads out there flapping their lips and saying, okay, no, we're not even close to being done with hiking rates, even at the risk of recession. Although I would say Bullard said that fears of an economic downturn are overblown. Are you on John Corpina's side, or are you in the cautious camp?
So, Liz, I'm definitely in the cautious camp, and here's why. As John said, this rally's been great. The market has been able to absorb just all sorts of hits. Those hits, though, are going to keep coming, and it only takes one of those to spook the market. And to me, the big one is going to be if we see the 10-year rising above 3% again. I know that is a psychological number. That's a number people don't like. So what I am doing in this environment, Liz, is I'm not saying that we're due for a big pullback. I'm also not saying that, we're going to rise another 10%. But volatility, whether it's the VIX or whether you're looking at implied volatility for S&P options, whatever it is extremely low.
Okay.
Now, historically, it's not low, but it's low for the last 6 months. So for me, I want to stay in this marketplace, but I'm buying protection. I will absolutely buy this protection. We all want to get insurance when it's on sale. Car insurance, homeowners insurance. The VIX is on sale right now. So to me, that will help protect any downturn. And you know what? If you give a little back, if the market continues to rally, I think most people would give that up.
And you like Devon and Chevron. By the way, Devon's dividend, 9.7%. Chevron dividend, 3.6%. But, John, I got to go back to you because earnings. I know you've been watching earnings. And, folks, this is a perfect example of under-promising and then over-delivering. I think we have about 94% of, let's see, of the S&P having reported. 78% have beaten on earnings per share. 69% have beaten on revenues. And that's also better than what had been expected when it comes to actual, year over year comparisons. So, John, do you see any signs on the horizon that the bulls have a stronger position as we head into the fall?
Liz, I think we spoke about this over a year and a half ago, talking about earnings season. These calls here have 2 excuses that they can use. One is COVID and one is supply chain. And as long as they keep mentioning these, that's an excuse to punt the can down the road and to be able to reinforce or get investors to buy into the fact that there are some bumps in the road, and down the road, in time, things will get better. So I think as they use those excuses, and as I said before, the dust has settled on some of these major headlines news that's out there, people are getting much more comfortable with these negative headlines that we see in the market. Yeah. And I'm a believer of 2 steps forward, 1 step back, whether the market's going straight up or straight down. If we start to see that pattern, I think that's where we start to show some stability, and we're starting to see it now. I do think, yes, there are some headlines that can give a 1-2 punch to this market, but I don't think we're going to see the volatility and the drawback that we've seen from a few trading sessions ago.
You know what I'm so happy to see right now with both of you? That you're on trading floors. I love the sound behind you both. Thank you so much. It's back to work, folks, whether you like it or not.
It is. Thank you, Liz.
Hey, we 3 love it. Let's put it that way.
Is.
John, Scott, great to have you both. Thank you so much.